Hey guys, what's going on? It's Rekt Capital and welcome back to the channel. Today we're going to be focusing on Bitcoin's price action through technical analysis, but then we're going to be diving a little bit deeper. We're going to be comparing why this current all-time high that we saw last week, $67,000, why this all-time high is different to the one we saw back here in late April. And we're going to be diving into that in a bit more detail, looking under the hood of Bitcoin's price action using on-chain analytics just to give you that perspective in the macro sense, but also on-chain. Subscribe to the channel for more videos like this in the future, and let's dive into the video right after our quick sponsor. Our sponsor for today's episode is Ledn.io. Ledn offers a wide variety of financial services for long-term holders of digital assets. Ledn helps you do more with your Bitcoin through their Bitcoin savings account, their Bitcoin-backed loan program, and their B2X program. Their Bitcoin savings accounts let you earn 9% on your USDC and 6.1% on your Bitcoin. With their Bitcoin-backed loan program, you can take out a stable coin or dollar loan off of your Bitcoin, which is much more tax efficient to keep your Bitcoin exposure while gaining dollar liquidity. And through Ledn's B2X program, you can double your exposure to the Bitcoin you already own. Check out the link down below in the description and do more with your Bitcoin today. Awesome. So right over here, we have a previous major resistance area, which is now figuring as a support. Great downside wicking just to tap into that buy side liquidity, and great U-shaped reversal right over here. It would be fantastic to see a weekly candle close above this potential sideways range. That would be effectively a breakout from the weekly bull flag. That's all. That's what we're looking for. That weekly confirmation that we've been able to test this support area and break out from this weekly sideways channel, and that's going to be a good sign towards eclipsing these highs also, which we're currently under at the moment, but weekly close above 63,000, and there's a good chance we could revisit the 65 regions and beyond. So at the moment, so far so good. This retest for Bitcoin has been successful thus far, but we're gonna be looking at the global in and out of the money when it comes to on-chain analytics. And I'd just like to quickly thank Into the Block for these insights. You can see right over here, almost 100% profitability on Bitcoin. In all of Bitcoin's history, 97.95%. That's the profitability of Bitcoin investors. So it's definitely been a good investment to allocate a portion of your cash position to Bitcoin. That's a very positive metric to always keep an eye out. We're gonna soon reach 100%, 1,000%, 100% profitability for Bitcoin. But what's even more interesting is that we're seeing renewed institutional interest and also retail interest, because if you just focus here on the total buy side volume, transaction volume in USD, that recent breakout to 67K was met with fantastic volume, almost $750 billion worth of transactional volume. And you can see that that peak far exceeds any peak we saw in September, in August, July, May, April. So you can see a tremendous increase in that transactional volume in this recent breakout to 67K, whereas back here in April, May, the volume was below, way below, substantially below 250 billion. So you can see how there is a tremendous difference in the transactional volume in USD for Bitcoin across time. April, very small amounts of volume compared to what we're seeing at that recent peak. So renewed buy-side interest is definitely apparent on chain. And before we move on to the next part, it's really important to just emphasize this. It's a 7x difference in volume, which is only a great indication of buy-side confidence and interest and exuberance towards Bitcoin as an asset. And we're also seeing less speculation. So this is how much money is occupied by traders. And you can see that October, of course, is a little bit higher than September. But overall, the speculation back here, for instance, earlier this year to May, for instance, that speculation was much higher. Traders were very active in the market. Right over here, you can see how the amount of trading activity, the amount of traders in the market was really high compared to what we're seeing right now at these levels. So comparing to earlier of this year and essentially this recent quarter and end of Q3, you're seeing a tremendous decline in the amount of speculation going on via trading activity, short-term speculation that's inherent in just traders taking positions and selling for swings or scalp trading. You can see that there is a diminishing by 40% when we compare April to October, and that's a tremendous change in terms of trading activity. So there's more retail and institutional interest in the transactional volume, but there's also less speculation. So holders are more confident to be holding, and traders themselves aren't necessarily eager to be actually actively trading in the market. They want to see what's going to happen. With price at all-time highs right now, traders want to see what happens so that they can now, or at least a little bit later on, decide on what their strategy is going to be. But at the moment, they're not rushing to be trading. They're happy with what's going on at the moment. No speculation, because there is a bit more confidence skewing towards holding positions rather than trading them for swings or scalp trading. And lastly, let's talk about the funding rate. You can see that the funding rate here, compared to back in earlier of this year, dating to as far back to January, you can see that the funding rate was quite high, especially after February, mid-February, and then mid-March, especially mid-April, a bit in May. But we haven't seen such high funding rates for many months, really. So essentially the first half of the year is where we saw high positive funding rates, which often preceded crashes and corrections, whereas now we're seeing these funding rates in the negative territory. So really interesting to see that, if anything, if any takeaway should be from funding, is that right now we're seeing negative funding as opposed to positive funding, and the markets overall are just less overheated compared to when we saw the markets overheated and experiencing quite a few crashes near that major resistance area, right? This major resistance area, if you were just to compare these points of contact in this major resistance area and just juxtapose that with funding, you'd see a high correlation between high funding rates and these pullbacks occurring upon rejection from this major resistance area. So really important to just pay attention to that, because that previous resistance with positive funding rates were essentially ingredients for a pullback, whereas now that previous resistance has flipped into a support. And now you're seeing really low funding rates, which is indicating a less overheated market. So the context, macro-wise, in terms of price action analysis and in terms of on-chain analysis as well, two different stories. Less overheated market, more overheated market. Going back here, previous major resistance area, now acting as a new major area of demand. In any case, guys, thank you so much for watching this video. Leave a like if you'd like to see more on-chain analysis by Into the Block. Thank you to Into the Block for these terrific insights that really give you some perspective in understanding Bitcoin's price action on the macro perspective. Really helpful insights. And of course, subscribe to the channel for more videos like this in the future. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.